Hey everybody, welcome. My name is Matthew. Thank you very much for joining. Today, let's take a look at Bitcoin fees. I've shown this a couple times in the last year. We got three spikes here over the lifetime of Bitcoin. What you're looking at is daily average transaction fee. Okay, so on average, what every single transaction, approximately 300,000 or so each day, costs to each individual Bitcoin user at that time. And a user could be an exchange, a user could be an individual, but it's daily average transaction fees. Three spikes, okay? We've talked about this. Gets up to about $70 even in 2017. A little bit lower actually in the 2021 boom at the beginning. The first boom, there was a double top, remember? So in April, it gets up to about $60 and then had a couple spikes here. The first one during the initial ordinals BRC20 craze last year, about a year ago, a little less than a year ago. And then now with the recent price booms as well in 2023, 2024. Okay, not as high, $30 or so at the time, $30 to $40 at the absolute top. All right, so this is daily average transaction fee. The point of this video is just to remind you to zoom out. Again, I don't know the future. No one knows the future, but fees are a proportion of miner revenue, but they are not the major portion. The other proportion of the miner revenue that is the largest, the other portion, I should say, it's the largest proportion, is issuance. That is new coins that miners are fighting for each block. And as we know, we're having the halving. The issuance is going to even fall from 6.25 to 3.125 here in about a month. And that is still, to this day, the largest proportion of miner revenue. Fees are a significant minority. And in order to see that, don't look at daily views for that. You got to look at TTM. Okay, so I'm going to do that in dollar terms, and I'll put that on the right-hand axis now. So here we see the proportion of miner revenue over the past year, a rolling TTM, a rolling trailing 12-month. And you see that the vast majority here, look at this, 99, 98, 99% in dollar terms is new coins coming into the network. Okay, so the lowest was actually here in 2018, trailing 12 month. You got down to almost 80%, meaning 80% new coins, 20% fees. It was actually 82%. So let's find the exact number for you even. Yeah, 82.2%. So about 18% fees, 82% new coins. Okay, and then that went as the fee pressure subsided. Grandma got less interesting in Bitcoin, less conversations about Bitcoin around Thanksgiving and Christmas tables. We go back up to almost 100%. Again, new fees as the proportion of miner revenue. Happened again in 2021. Interestingly, again, only the first spike where this proportion of miner revenue falls to get to about 89%. So not as severe as the 2017 boom. And then we see this again, okay, trailing 12 months. It is persisting as we've had both the ordinals BRC20 token craze topic about is this spam, is it not on the Bitcoin blockchain? And as well, of course, the price booms and more people become involved. Grandma gets interested again, or at least people that want to use grandma's money to buy Bitcoin. People get interested again as the price spikes. So fees rise and fees become a larger proportion of miner revenue. Okay, so, and that's happened here, has not been as severe so far as the last two booms. Okay, it's not at the moment close to 80%. We're still around 90% issuance versus 10% fees, and actually a little bit less, 8-9% fees. 8-9% fees only as a trailing 12-month proportion of miner revenue. This is the big picture. This is macro. This is where I think, regardless of what you're going to read about people that are very well intentioned about Bitcoin, day by day, month by month, still, we are actually not, we're 10 percentage points better, if you want to say that, than the worst extreme that we had so far, which was in end of 2017, start of 2018. 2018 as far as fees go. So I think it's important to just keep an eye on this. Yes, fees are spiking here. We're having these booms. We're having people that want to buy Bitcoin, even more so than the ordinals or the BRC20 topics. This is clearly just people getting interested in the price rise of Bitcoin. And you can see that in the market. Coinbase couldn't even display, they had a GUI issue. Some of you might know, they couldn't even display on the screen people's balances because there was orders of magnitude more interest. And they prepare for this. They know this. Everybody knows this. We have these booms. People forget about it. They don't think about Bitcoin. Then the price rises. They think, oh, I got to get some, or I got to use daddy's money or grandma's money to buy some. It's just the nature of markets. It's the nature of FOMO. It's the nature of speculation. For those of us that have been paying attention over a long time, we expect this. And again, Bitcoin is being adopted. This is just how it works. I also don't want to sound Pollyannish here. It's going to happen at some point that this green line is going to fall below 50%. Okay, so by the time where fees are taking over the majority of miner revenue over a daily basis frequency or a trailing 12-month frequency, this green line will be at 50% and then falling below 50%. And then we will be in a truly fee market where fees basically dominate the, you can call it block reward, or basically the amount of money in Bitcoin terms that miners will earn if they successfully mint a block. Of course, typically we call the block reward the inflation portion, new coin portion of blocks that are produced every 10 minutes. But in a way, fees themselves are a block reward because if miners don't win that block, they don't earn those fees. All right, so those are the economics of the Bitcoin network. Yes, there are two components of miner revenue, but if you want to talk about congestion or people being able to use the chain, I understand all the arguments. I understand that it's a very heated argument for many people. But as far as how that looks for miners, and are miners able to handle this, and are fees too crazy, both in dollar terms and in trailing 12-month dollar terms, we're actually not at the most crazy points. Okay, that happened at the end of 2017 and the start of 2021. I'm sure we'll get there again, and I'm curious to see how low this line will go during this next cycle, but we are not there yet. And to put it in Bitcoin terms, Bitcoin pretty much lines up in a very similar way. Okay, let's zoom in. This is actually looking at trailing 12-month, the native unit that miners earn for the block reward, which is native Bitcoins. Just want to take a moment to remind you that this show is brought to you by Trezor, home of the original Bitcoin hardware wallet. Established in 2012, Trezor means business in Bitcoin security and functionality. Whether you're protecting your identity with Tor or using Trezor Suite to smoothly send or receive a Bitcoin transaction, Trezor gives you full control of your coins in a transparent and fully open source manner, both on the hardware and software level. So head on over to Trezor.io to grab your Trezor Safe 3 with the secure element, Model T with a touchscreen, or the original Trezor 1, as well as a ton of available accessories to back up your keys and keep your coins safe. We're proud to be associated with Trezor this year. 6.25 miner reward, block reward, new coin issuance that happens now. Will decrease to 3.125, but still that number in Bitcoin terms over trailing 12 months actually lines up very closely with the US dollar line. Okay, so whether you're looking at fees in dollars or in Bitcoin terms, whether you're looking at new issuance, new coins coming into the world every 10 minutes in dollar terms or in Bitcoin terms, the lines pretty much line up. I think it's just interesting to see it both in Bitcoin terms or in dollar terms. Point stands, as I said before, We are not into the craziest days yet of this boom, as we have been in the prior two, and I will keep you posted as this boom continues on. Keep calm, hodl on, and thanks for watching.